Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Friday, May the 20th, 2016. My name is Doug McKay. I am the founder of Quantum Leap Futures. Each morning we come together in these live sessions to take a look at the market, macro to micro, take a look at the structure of the market, drill down to the trade levels and the targets and our hypotheses for the day. This is a subscription room, so I'll put up my contact information in just 1 second. Before I do, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. My contact information, you can send an email to quantumleapfutures@gmail.com. There's no website, there's no blog, this is not a commercial venture. You'll need a Skype account to send me a Skype contact request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. Of course, there's a couple of years of these videos. You can see our past performance on YouTube. Just do search Quantum Leap Futures. If you like what I do, follow me at Crazy2, spelled with a K and OO, and that'd be nice. Okay, it is Friday. It's OPEX, so we've got monthly options expiring today. Expecting some early movement and then pretty sedated action after the fact. Yesterday, our main hypothesis was we open auction in range but out of value, come up and test value, and somewhere between the 38.50 and 43 area, we are expecting responsive sellers to step in and then rotate us down and take us down to that next big target below, which was the 24.75. Didn't take them long to do that, and they came right down right away. Then we basically chopped around between the 29 and the 24 area, made a low at 22. This is a weak low down here at 22. Don't know if we're going to visit it today, but we'll talk about that. But they chopped around here, and then they just started to slowly grind their way up, which was hypothesis 2. So our hypothesis 1 was pop and drop, and then our hypothesis 1 was to come down, trade around here, come down to the 24 level, and then slowly work their way up back into the middle distribution. Didn't quite get up to that 43. We did do that in the Globex, but kind of, combination of playing out hypo 1 and then working out on hypo 2 with the slow grind up. Overnight, we open auction in range. We broke out, and basically we've been chopping in around that 43. 43 is the market profile POC. That's time price opportunity. So the most time that we spent in the last I think 4 weeks has been around this 43. The VPOC, or the microcomposite VPOC, is at 40.25. So we've got two very important levels, 43 and 40.25. Of course, we're in this blunt area of the composite. But let's not get ahead of ourselves. Inventory is net long. We got a little bit of a double distribution down here with the HVN at 38.50. Remember how important that 38.50 was, with the LVN overnight at the 40.25, just one tick below the composite high volume node and the microcomposite VPOC. So let's come back to that. What I always like to do is let's get the news out of the way. We had news at 8:30. We had Canadian core CPI, retail sales, CPI, and retail sales month over month. Basically, it was, just a slight miss, but, not bad. 9 o'clock, coming up in 10 minutes, we've got FOMC Torillo speaking. And then 10 o'clock, we've got existing home sales. And then all day, we've got G7 meetings going on. So there is a little bit of news, but the big news is it's OPEX. So I'll have to take a look at where the max pain is, but likely to try to pin it somewhere. I'm thinking they're probably going to probably go up and pin it at the 2050 area, if not the 2025. Those are my two pin spots, but we'll take a look at it a little bit later on when we get into the open. In fact, if somebody can even pull up the Max Payne website and get me the Max Payne on SPY and post it, I'd appreciate it, because I have trouble getting into that site. So each morning I do like to start my day with a basic candlestick chart. I start with the monthly. I use a 9 EMA and a 20 SMA. I'm looking for slope and separation and whether the trend is being challenged or violated. And you can see that we've had this, wonderful upward trend for several years, and now at the end of 2015 we've challenged it. They took it back, and then beginning of 2016 they challenged it again, but we've taken it back, and we seem to be holding on for dear life this month so far. Our month open is at 60.75, so we are in a bearish month right now. Our week open is 20.41 and a quarter, so we're just above the week open. But right now we are in this consolidation mode inside of the monthly. In the weekly, we had this nice move up. They've been challenging and trying to violate the trend, and we've got a bit of a doji going on right here. We'll see if this week is the fourth week in a row that we get a bearish week, or whether or not they can hold on to this 9 EMA and close the week out on a positive note. If we do get below, there is a test down in 1988. Not likely to get down there. Our weekly downside ATR target is at 2006.75. So basically the trend is intact, but being challenged right now on the weekly. On the daily, we do have a downward trend going on the daily. If you draw a trend line, and I think this is important to put on your chart today as a overall guide, we need to get above the 2065 level before we break this downward trend line that we've been following for a couple weeks now. So put that line on your chart as a guide to you, because if we get above 65, we could get some capitulation. We can get a late Friday afternoon rally. That is outside of our upside ATR target, but you never know what we're going to get on an OPEX day. But the trend itself is down on the daily. On the 4-hour, we were trending down, and then yesterday afternoon we took it back, and overnight we've had continuation up. We closed near the highs yesterday. Our high was 39.75. We closed at 39. We had that 40.50. It was pretty clear we were going to go up and get continuation in the overnight session. So we are right now trying to challenge and violate this downward trend. We're currently trading above the 20 SMA and above the 9, and coming into a moving average hug here. So consolidation, possibly violation of the downward trend on the 4-hour. On the 1-hour, you can see that we've rolled it over, and we're starting to trend up. They were challenging it, but we've taken it back. So as we move down in the time frame, we are seeing some upward trend. The 20 SMA is at 2040.75. That's right at a key MC VPOC at 40.50. If we get below, we have a naked cross down here at 34. And 34 to 35 has been our liquidity level, where all that buying has stepped in over the last little while. So if we do violate the 40.50, I've got targets at 37 and a quarter and 34 as major testing points. Going to the 30-minute, you can see we've had this upward trend, and we're getting this consolidation right now. no real trend. We are above the 9 and the 20, but just barely. Again, there's a naked cross down here at 31.75. Our key line in the sand is going to remain at 31. Anything below 31, I'm looking for a move down through the 24 and through the 22 to take out yesterday's week low. Going to the 15-minute, same thing, consolidation. 5-minute, we got a little bit of an upward trend starting. We got a little bit of slope and separation starting to the upside. So right now, as we move down through the time frames, we're seeing possibility of continuation coming into the RTH session. So let's take a look at the big picture. Again, just to put it into context, we've got to go back to the end of 2015, where from October through to the end of the year, we were trading in this upward distribution of a double distribution with the key microcomposite LVN at 16 and the microcomposite VPOC up here at 63.50. And we've been back, once we got back inside of the value area and above that microcomposite LVN, we basically have traversed the whole Gaussian distribution, tried to break out and go into price discovery, put in a new all-time high, new all-time adjusted high, and then we've come back into balance, and we've been chopping around in this distribution zone, which has got a lot of undetermined fair value. You've got 69.75, 61.50, 63.50, 55, 51, 53. I mean, you name it. There's a lot of confluence in this distribution zone. It's very blunt. The three dominant prices coming out right now is 51, 61.50, and 40.50. But we've got intermediate at 49, 43, and 37.25. So it's just potluck here. It's just everything and his brother. Putting a larger microcomposite encompassing the three balance areas. You can see that we've got a little bit of a double distribution here, and there's a LVN, microcomposite LVN at 46.50. This is going to be a key level for me today. If we can get above 46.50, then I'm looking for continuation up through into the 51 area again, and more likely up into the 53. Remember that our Fed number, the return to the scene of the crime, is 53.75, which sparked this bit of a sell-off. So if we can get above that 46, a move to 51, accept 51, and push up into the smaller time frame microcomposite VPOC at 53, and a return to the scene of the crime of the Fed announcement, Fed minutes on Wednesday at 20:53.75. So taking a look at the overnight. So far, the overnight high is 47.50. Of course, we've got 30 minutes, and we're only 2 points away from it, so we could put in a new high overnight. Our overnight low, not likely to be taken out, is down here at 37.25, just 2 ticks below the year open. The VPOC could shift to 44, but currently right now it is 43. If anybody sees these things shift, let me know. And then our overnight high is currently 47.50. And we have this LVN at 40.50, which is right at the microcomposite. I'm going to use just below that as a trade area right here at the 39.75. And that's all the information. Inventory is net long, so if they get below this 40, that could cause some pain to the longs, and we could see a bit of a flush if we get basically back inside of yesterday's trading level. So let's take a look at our levels and start putting them in. Of course, we talked about that 46.75. That's going to be a key area for me. I'm actually going to use 46 and a quarter, because above it, I think we're going to get a move to take out the overnight high and a push up into this 49. Target above is going to be that 51. And then the FOMC and the 53, and just above that we have the value area at 57 from this profile here, and that's a range high at 57.75, so put a trade area there. I really don't want to be shorting in this area, and again, it's going to be whippy anyway. So, I mean, you want to get in, get your position on, and try to hold on, and don't sweat the wiggles if we continue this upward move, because it's going to move, 2 steps forward, 1 step back, and you're going to see some fairly decent rotations. Below us right now, there's really not much to lean against to the long side. There's the value area low here at 42.75, but to me, it's unless you got a different setup, it's really no trade area until we get to 46 and a quarter or down here to 39. And I know that's a pretty wide range, but there's not, with the 43 POC and the 40.50, and all this undetermined fair value, there's really not much to lean against. If I was to lean against anything at all, it would be this 43.75. And so I'm going to put a trade level for those that want to get aggressive at 43.75, but really I'll be looking for other setups in here. To the downside, below 39.75, look for the 39 to get taken out and a test of the year open and take out the overnight low at 37 and a quarter. We've got a little bit of support coming in, but really the major area that I want to be looking at is between the 34 and the 35. This has been the liquidity level, is the value area high of the day yesterday. Bit of a double distribution zone with the LVN being right here at 33. So I'm going to put a trade level there as well. It's going to get a little bit compacted here. And then our key line in the sand is not going to change. It's going to be this 30.50 to 31 area, because anything below that, I'm looking for them to come down, take out that naked VPOC, and test the daily downside ATR target. Our 20-day ATR is running 23.45. So off of the current high of 47.50 minus the 23.45, that gives us a downside ATR target of 24. And then you've got the value area low just below, and then the week low at 22. I'm going to use 22. I don't think the 23 is really going to be a factor. It's all going to be, do we hold the range? And then anything below that, the next move down, I'm looking for a test of the 16 area and that key support level and the microcomposite LVN. Anything below that and the next big target below is all the way down here at the 2006, 2007 area. And this happens to be our weekly ATR downside target. So, I mean, if we get below the daily ATR downside target and get into a trend day, 16 and 06 are two possibilities, still within our weekly range. To the upside, above the 46 area, look for them to, looks like they could come up and expand the overnight high, but the key target just above is 49, and the main target above is 51, with the possibility of the 53.75 return to the scene of the crime, and then chop. And then all our levels to the upside all remain the same. Our daily upside ATR is off of the bottom of the overnight low is 20.6075, and that's just below our composite VPOC, or the most traded price going back all the way to 2013. So those are the levels. What are we looking at? Well, we're going to open auction out of range. So first of all, anytime we're going to open up outside of range and outside of value, we have to be on the lookout for an open drive. So if we could see some initiative buyers stepping in here and just ripping us right up through the overnight high and right back up into this 51 level. It's not my main hypothesis. My main hypothesis is we open auction out of range, move down towards the 40.50, and somewhere between the 43 and the 40.50, I'm looking for initiative buyers to step in and then walk us up and push us up through into the 51, 53 area, and I expect to chop around there most of the day with the possibility of a late day probe up into the 57, 59 area. So Hypo 1 is open auction, out of range, pretty decent chop on the open, a push down through to the 43 to 40, 50, find initiative buyers, and then rotate up, leaving the prior day range alone. So that's Hypo 1. Hypo 2 is an open auction an open drive and a push up through into the 51 to 53 area, chop around there, and then fail and come back down through and come down into this 34, 35 level and testing that year open and back into the upper distribution from the prior day. So Hypo 2 is an open drive, a push up, finding responsive sellers between 51 and 53.75, and then a rotation down, chopping at the open, and then push through into the upper distribution and the value, maybe even a push through into the 31 to 27 level. So that's Hypo 2. Hypo 3 is a open auction out of range, come down, chop around in the range at the top of the range, and then fail and get a continuation wave coming down, testing between the 31 and 32 area, chop there, and then a push through down to take out the 24, maybe even a push down into the 21 to 17 area. So Hypo 3 is open auction in range, come down, even maybe a little pop and then drop, taking out the overnight high, chop at the range high, fail, come down through and test this 31 to 32 level with a late day probe down into the 27, maybe take out that that weak low at 22 and push down into the 17 into the end of the day. And then my fourth and alternative idea or hypo is a move down, fail off of find buyers at the range or near the value, and then get a strong move up, out, and push right through up, and we get a trend day up, and we close somewhere up here in the 69.70. It's a low probability, but it is something that we have to consider. We have found we do have some strong buying tails from the last couple days, so the buyers are still stepping in, and the selling is getting absorbed. Taking a look at the Keltner, our Keltner center line is at 43.50, right on top of our 24-hour VWAP, and we are above that. A move up to the upper Keltner line is going to take us up into that naked VPOC at 49. If we fail below the 43.50, a move down to the lower Keltner is going to take us down into that 37 in the overnight low. So pretty defined, Keltner channel. Taking a look at gold. Gold continues to chop around. We've got another little distribution zone going on right now, right here. We've broken below the range at 58. We're trying to hold value at 55 and a quarter. We're currently above that 58, trading 60. If we could hold this 58, then I'd be looking for gold to come back up into the 74, 73 area. But if we fail again at this 58, I don't think that this 55 is going to hold. I think we rotate down through, and again, I'm looking for a move back down into the 1235.30 or the composite VPOC that goes all the way back to October of 2008. I don't think we're getting, we're just chopping around, especially if the indices go today. I'm expecting a move down to gold, a continuation down in gold as it comes down to find buyers. So that's gold. Those are my hypos. It is Friday and it is OPEX. As always, keep your risk in check today. Don't let a position get away from you. You don't have time to repair it in an overnight session, and it's terrible going into the weekend on a losing note. You have to wait all weekend and stew on it. So just pick your battles. One note, it is Victoria weekend here in Canada. So this is our May 2-4 weekend, and it is a long weekend. So I'm going to be probably leaving early today. Well, not early. Our official end time for the room is 1:30 Eastern. I will be trading up until then with you guys, but I'll probably be taking off after that. And then Monday, I'll probably do a morning pre-market session, but I might do it early because I think I want to go golfing on Monday morning. So, but it is a holiday here, so I won't necessarily be around. I might be, I might not be, but I don't want you guys to expect that there'll be a room. Well, I'll open the room and Marvin can take control on Monday. Anyway, that's going to complete our pre-market session. As always, trade well, trade safe, and I'll catch you on the flip side.